everybody. Video cameras on if you don't mind. Great to see you. Okay. All right, a little bit of fun music now that I'm down here in the Caribbean to welcome you all. It is so great to see you here. I'd love first for you to drop a hello in the comments. Let us know where you're calling in from and why you're here. I'd love to hear it. Drop in the comments, where are you and why you're here. People will be slowly joining. However, because we have a 45-minute class, we're going to get going. We're going to get started. So grateful that you're here on time and to see all of you here. So welcome to the first Liv.Aligned class of fall 2022. My name is Tracy Livingston Howard, and I am the co-founder of a company called Liv.Lit, where I do coaching and training with incredible high growth business leaders and CEOs and founders who are looking to create something with their business and their life. I am going to try not to get distracted as I let people in the room and welcome you all here. And I'm so pleased to be joined today by Christopher Howard. I will introduce him in a few minutes. Yes, we have the same last name, and yes, he is also my husband, as well as the co-founder of Liv.Lit, as well as a trader in the markets, which you all will get to know very soon. We're here because I've been behind the scenes with so many of my amazing coaching clients, as well as training in the rooms with senior executives and leaders who are really navigating such incredible times that we're living through. Are we not living through some of the most historic times for our businesses, for our impact in our life? And I found that no matter if we're leading a team of 1, 100, 1,000, or 10,000, or even leading our family, our money, our finances, our revenues are really important in ensuring that we're growing and thriving during this time. And so I found no better topic to kick off this leadership series for all of us is to start with the topic of money and finances and how we can make more informed decisions in our finances through these times of turmoil. And I want to first thank you all for your time, for being here. If you had paid for this class and didn't get what you needed, I could refund your money and give you your money back, but I can never give you your time back. And so everything that I'm going to do today and throughout the series is with the intention that this is worth your time. So welcome and thank you so much for being here. I'm going to share a little about our story and then we're going to dive right in. But the last few years have been incredible in terms of financially for Liv.Lit, our business, as well as our family. It's been actually quite an emotional roller coaster. Christopher and I have always been looking at how to maximize our revenues and our financial growth in our businesses, but also, reduce our taxes, increase our quality of life, and how to safeguard our money through turbulence, especially in the realm of personal finances. We have moved from London to Germany and now to an island called Curacao in the Caribbean to do just that. We find ourselves pivoting with everything going on in this external environment, in this business landscape, and personally, in order to maximize our money, safeguard our money, and really ensure that our business decisions are really rooted in the reality of what's going on. If that is something that matters to you, can you please drop a 1 in the chat box? If what I've just said matters to you in terms of safeguarding and growing your money, both in business and your personal finances, it's huge. It's a huge topic. Love the ones. And I would love if you all would come on video if you don't mind so we can see you. That would be great. And so my intention really for today's class is to bring someone on. Christopher, not only is my husband, but he's someone who has become incredibly well versed in understanding trading, the markets, and just understanding the big picture of what's going on today in the financial and economic landscape. So he's really here, not just to give us advice, because he isn't a financial advisor. That's not what he's licensed to do. He's here to help all of us learn how to think and how to navigate the landscape for ourselves. So he's going to give you how he's been navigating the landscape so that you could apply it to your specific situations. And so we know there could be a lot of pressure to try to get it right, to try to predict what's going on, to try to understand what's happening in our countries or our businesses. We're here hopefully to at least give you the next right thing, or maybe a few right things to get you in the direction to make great financial decisions for your business and for your family. And so to get started, I'd love for you all to set an intention. I do all intentional coaching in the work that I do. And I always ask my clients, what's your intention for being here? Why did you say yes? What do you want when you get off this Zoom call at whatever the 45 is for you on your time zone? What is the outcome you want to leave with? What's your intention for being here? Please take a moment to write that down and drop it in the chat box, please. What's your intention for being here? What do you want? Thank you, Melanie. To hear and gain a new perspective is about get more educated and confident in next steps. Sasa, curiosity, new perspective. If there's a new perspective on what, I'd ask just a touch more detail, because that can help guide our conversation today. Okay, let's see who else we got here. Good to see you all. To get more insight, SK, Ariadne, to expand your perspective around finances, Marielle, clarity on strategies in this new market environment. Brilliant. Brilliant. Angela, hi. To learn something I might not have thought of. Okay, good. Well, y'all know me. The first name of the game is awareness. We must create a new awareness, have a new epiphany, a new thought before we can take a different action. So that is our intention, is to help you have those new thoughts, and so that you can do something with them, that you get off the call and you maybe make a different choice or do something outside of what you normally do that could help you related to your money and your finances. And so let's get started here. I would love to introduce and welcome Chris. He and I are going to do kind of an interview podcast style for the first 15 minutes. Then we're going to go to an open Q&A. And I want you, as you're listening to the Q&A, the podcast style, is what questions are coming up for you? What do you want to ask him directly as you're listening to his thoughts? So please listen with active listen. And we're going to then open up the floor to all of you to ask questions. So maybe you could walk away with something specific. All right. So today I have the immense pleasure to welcome and introduce you Christopher Howard. Chris is the co-founder of Liv.Lit and works on the strategy, business development, and everything finance related, all of our business and personal taxes. Thank you so much. His educational background is in economics and finance, and he started out in private equity and investment banking, but said goodbye to his investment banking career in 2008 when his employer, Lehman Brothers, went bankrupt. He's since worked in strategy consulting and recently as a consultant on a project basis. And Chris has always dealt with our investing accounts, but over the last few years, he's really focused on trading in markets. And again, yes, he is my husband and father to our two beautiful kids. He's really my right-hand man to so much of our strategic and financial decisions, both as a family and as a business. So welcome, Chris. So glad to have you here.
Thank you. Thanks for having me.
You're welcome. And we're sitting in different rooms, so we wouldn't hear each other talk. Okay, that's how we're set up. So first, Chris, I would love to just hear a little bit about you to briefly describe your professional journey and how you got into trading in the markets.
Yeah, I mean,
yeah, as you heard, I started out in my career in finance, and also that was my focus of my studies back then. What I realized when I was working in finance is that it was actually not a lot about finance, but mostly about selling. And I was always interested in investing, but it's not really that kind of job. And yeah, it also came to an end because of the situation in 2008, which, yeah, to some extent is a bit comparable to where we are right now. So this is where my interest came from. I mean, at university, I always chose finance courses, and I liked the whole thing about financial theory, economics, and so on. But then professionally, I went a slightly different path. But I always was interested in it. And the issue is that what you learn at university is that there's no opportunity, basically, that everything is efficient. At least when I studied, like a long time ago, there's like this thing called the efficient market hypothesis, and basically everything is perfect. There's no opportunity to make extra gains, and it's that's what you learn, and that's what I believed back then. So
you were taught a lot in school that you quickly learned, especially at Lehman Brothers, it's not actually how the world works. And then what got you to leave?
And that's all a different side of the whole thing. Yeah, I mean, that was more behavioral, and also not looking actually at the finances. It's just selling to an investment community, making decisions, securing your goals. It's not like doing the right thing. It's not like, oh, look at this is attractive, I'm gonna invest a certain way. So that's where my interest came from. And then I didn't do a lot with it for a long time. Whatever types of investment I had, I was probably doing what everyone is doing. You just have a certain allocation, pie chart based, and then you just wait and do nothing with it, and look at it once in a while. Sometimes it looks good, sometimes doesn't. But yeah, so that's what I was mostly doing. And then I think the point where I got more interested again and involved was after our first son Liam was born and I left corporate. I was working with Tracy, but then I also got more involved into researching what to do in terms of investing, and I tried a lot of things. Most things did not work. It was a long learning journey, but finally I would say I'm at a place where I understand mostly what's going on, and I actually we more likely right than wrong. I mean, you're not right all the time, never, and timing is also an issue. But I would say I'm not like blind, listen to a lot of people and get confused. I'm now at a stage where I know what I'm doing, and it's going well, in particular compared to how it would work without this.
Well, let me pause you there, because I know that you've done hundreds and hundreds of hours studying the markets and actually understanding how to better predict and plan and forecast what's going to happen. And obviously for people here, they want to know what's happening now, and then how to make decisions depending on where the market's going. And we've known the market is now crashing today, and inflation's at an all-time high, at least in the US. So what got you to step back and start pursuing knowledge? Like what was it that got you to walk away from what you've traditionally known? And this is what we're going to teach a bit today, is like how Chris actually finds information out versus what most people are doing.
Yeah, I mean, I like to learn things on my own, and once I try to find stuff out, I don't stop. Yeah, so and that was my approach to this, and I try to get my hands on any kind of knowledge, listen to a lot of people, try different techniques, products, and a lot of the stuff didn't work as promised, and I figured out that there's a lot of noise. I mean, there's a whole industry of noise, basically, where people just sell stuff, and it might work in the short term. And the thing that then started working for me is to step back and actually look at, okay, what is underlying, what's driving the market, which is the economy, but it's forward looking, and whatever you see in the news is usually backwards looking. So I needed to find an approach where actually you look at economic data and what's going on, and you can. And I'm not predicting. I just know, okay, is this gonna go down, like further downhill, or is it at an inflection point at one point? So that is the level I'm at right now. And right now, I mean, to summarize quickly, to give an answer to the question is, it's gonna get worse from where we are.
What's going to get worse?
Yeah, right now everyone is concerned about inflation. I mean, today was a big day again because that came in higher than expected, so everyone got scared again. But that's not really so. That is one issue, that inflation is high and it's not slowing very quickly. At the same time, everyone hopes interest rates will be lower, but that's unrealistic against the backdrop of inflation, which is sticky. And then the economy is slowing in general. So what you will see in the next few months is not the issue of inflation really, but it's companies making less profits. That's not really the main conversation. I mean, you can see some early indicators where Apple said they said sell less phones. It's like starting slowly, but that will get worse over the next few months.
So, I know that you look at so many things to assess what's happening in the world. And I work with clients whom had a really big boom during the pandemic. Some of them were in logistics, and they just had businesses where they really benefited from what was going on. And then what we're seeing now in 2022, I feel is like the backlash of all of the different policies and stipends and different things that have happened, that now we're seeing a whole nother side to some of those consequences. So for the people listening, first, how come you don't recommend that people read the news, or as you say, the media narratives, to understand what's going to happen in the economy or in the financial landscape?
Problem is, it's not new information. Whatever you read in the news is old. And whatever happened in terms of, I mean, if you think about trading in terms of price action, that's what happens is the stock market goes down and then the narrative comes out to basically explain what happened. But I mean, it's basically a zero value. So everything you read in the
where
news
do you go to get the information? Where do you go to get the information to understand what's going to happen before it happens?
Yeah, so basically what I'm using now is, that works. There are different versions of this out there, but it's just a very simple macroeconomic framework. And it's a company where I get like the economic data from. And I can quickly show you like a couple of slides how that looks. It looks a bit complicated probably, but it's probably useful to just give some colors.
Well, let me check just the audience as we open the slide. How many, could you all just drop a 2 in the chat box if you are have concerns or worries about either inflation or the recession impacting your business, meaning like your clients, customers, do you have a real concern about recession or inflation impacting your business model as it stands? And we can get those, drop a 2. Or maybe you've never thought of it and say, I haven't thought about it. Okay, Melanie, yeah. All right, Jennifer, it's more impacting your operational model and people. Marielle is a 2. Okay. I think it's really important we all think about how that's impacting our businesses. All right, go ahead, Chris.
And the thing is, I use this also for our operating business. For example, which is not very complex because it's just consulting work. But all my clients are in the UK. So I had a huge currency risk. And I knew if this continues, that the dollar will appreciate against all the other currencies. So because I knew this, I hedged my currency risk ahead of what's going to happen. And other implications are, if you understand the business cycle and where you are in the business cycles, I mean, depends on the business. Yeah, I mean, if you have retail, how you deal with your inventory levels, or how much you invest. Is it a good time to invest? Probably not right now. So, but so this is from a subscription I have. It's not very expensive, but the subscription is not expensive, but understanding it costs a lot of time. So that's why people, like, some people probably won't like this, but yeah, for me it's great because I just like studied this in an inside and outside. So this is like kind of on the left-hand side how right-hand side how I was taught in school and my career. It's like follow the consensus. Oh yeah, this time is different. There's narratives, economic theory, the market is efficient, and then feel and valuation. Yeah, that's just like the old way of looking at things. And this is like Hedgeye is this provider where you get like the insights from. It's math-based, actual history, and it's like a lot of psychology actually. And it's just like the overall framework. And the important thing is I started to not look at things on absolute levels, but rate of change. So where we were probably in terms of the markets in November last year is here. So everything is great. Yeah, you're at the peak, but everyone is super excited. Everything is great, but it doesn't matter. It's probably the worst point to be invested because it only goes downhill from here. And the problem is, how do you know you were here? Yeah, and there's basically this framework, and I'm trying to keep this very brief. Yeah.
Well, can we talk about that? Maybe we have to talk about that slide in another way, just being aware of time. I want you to go back to the other slide. And I love how you brought in November of last year. What's your take on the current landscape right now? Like, what's the big picture happening now? And what would you say you think is the big picture for the next 2 or 3 quarters? So using this model based on Hedgeye.
We are here, yeah, definitely. We're at the beginning of the decline, yeah, or at the like we've been in there basically from the second quarter this year, and I need to go to the next slide to just explain where we are, yeah. So the framework is basically, and this looks complicated, but I'll just explain it. There are 2 axes. One is growth, and the other is inflation. And basically, when growth is accelerating and prices go down, then you're here, which is green, which is great. And prices go down, growth goes up, it's great. Growth goes down, prices go up, it's also great for business. Yeah. And this is number 2. We are right now in 4, which is economy is slowing and prices are going down. And it doesn't matter that inflation is high, it's decelerating. And this is like the worst spot. Yeah? You have like these 4 quads, and this is the quad 4 is the worst spot, is inflation decelerating slowly, which is even worse, and real GDP growth going down. And yeah, I'll just show, sorry, this is
So you're saying, at least in the big picture right now,
so,
we're in quad
and this
4,
is the
which
world.
worst. And if anyone understands, we're just in the absolute
I just
worst
try
part.
to keep it very
Yeah.
simple. Yeah, 4 is really the worst spot, has the worst returns on the market, worst impact on employment, and all of that. So you see all the countries here. We are now in Q3. It's a 4. You can see we had like 3s, 2s, like times were really good here. Yeah, because you didn't have a 4 for a long time. The last 4 you had was during COVID, and then everything accelerated again. So we had a great 2.5 years here. And then Q2 this year just started. And it's 4, 4, 4, which is basically not very good. Yeah. I mean, and the problem
And
is
the United Kingdom above it is also entering 4s as well. I see that we have people in England too.
The problem is it's global, and you see that almost all countries have all 4s, yeah, apart from China, but that has its other issues. Yeah. So, I mean, based on that, the outlook,
China,
I mean, this is where
India,
we are. It's
and
not
Russia.
very good. And the issue is we have the 4, and if we go back to back to this. It says monetary policy bias dovish, which means that usually if you're in 4, the Fed would support. Yeah, so they would come in and ease financial conditions, means QE, interest rates down, and then to stimulate the economy to get out of the 4, basically. Yeah, because prices go down, but the main issue is economic deceleration, basically recession. But right now, inflation is so high that they do the opposite. So they make things worse, but they don't have another option. Like there is no alternative to this. They will at one point.
What does it mean for
Yeah.
people on the call? What is this kind of quad 4, now that we're diving in? What does that mean for us?
It just means that and I mean, every business is different, yeah, but it just means that in general, the outlook for the general economy is not very positive. For investing, it's not very positive. If you own stocks or if you want to buy stock, it's not the space to own stocks or anything risky, crypto whatsoever. Yeah.
What about the property market?
Yeah, I mean, it's gonna suffer. Yeah, I mean, and the way I look at things is, if you look at all the 2s and 3s we had, and all the stimulus we had into the economy to build this bubble we had, you can look at prices before the stimulus checks came in, before interest rates were up, and then you probably have an idea of where it could go. But I mean, I don't know where it exactly goes, but it will most likely go lower. And the real estate market is more sticky, and that will take longer to like work its way through. But you already have the issue of the mortgage rates, and interest rates just go up. Yeah, I mean, today they went up again. Yesterday they went up. So this will continue, and now the inflation figures came in, so interest rates will go up further.
So for people listening, and then we will open up a Q&A. So hopefully this is at least, I know for me, this is a lot. This is not my area of genius. This is why I have Chris. I really recommend finding a Chris. So I understand this is a lot. However, I want people, what do you think it's important? How come you think people in the room, it's important to know this about the quad 4? Like what is this going to be helpful for? Maybe what kind of business or personal decisions do you think that would be helpful for us?
I mean, if we start with investing, I don't know how people invest, but there was a lot of FOMO, I would say, over the last few years. Get crypto, make a quick buck, do this, buy stock. So the market is dipping. People think it's a good time to buy. So I wouldn't suggest that, because then you get just trapped and it goes down, down, down. Like, you need to wait. And you would know when it's consolidating. It's not now. It's not in the next few months. So I mean, I would just say don't buy stocks and don't listen to these people on CNBC who call the bottom every day. There's just, it's also really, I mean, it makes me sometimes a bit angry because it's irresponsible and it creates a lot of harm. And these people just make money off clicks and buy this. This isn't a great idea. It's just all noise, and they all have vested interest. They don't have your best interest at heart. But they tell a story that's appealing because you don't want stocks to go down.
Well, what would
that's one thing.
I know that that the news is old news. Don't read that. And a lot of what's going on of people trying to help is not helping. And we're really big here at Liv.Lit is to help yourself. So what resources would you recommend us? Like, where would you point people to look to start to become more informed, get more accurate kind of information?
Yeah, I mean, this is a research company that's run by a former hedge fund manager, and he's all about educating people at this. And
can we turn off the screen share, and then we can, unless you want it, and then keep going. We can. Okay, good. All right, and we have a question too. So go ahead, and then we'll get to questions.
So it's called Hedge-Eye, and they have a free 90-minute, like a course on there. It's called Hedge-Eye University. It definitely makes sense to do that. And then you could get, I mean, if you're really interested in it, I would recommend getting subscription, which is only, I think it's $40 a month or something. There's not something material, but you need to invest the time and listen to him like for half an hour every day. And he can be a bit, I mean, some people get annoyed by him, but I mean, I think he really has the best interest of people at heart. So I can
So you'd
really
recommend
recommend that.
Hedgeye and the university 90 minutes to just get some of that foundational
basics,
understanding of
just-
like, okay, how can I I think it's so helpful to see the quad fours and just understand that this is going to be going down and down. Let me ask you a quick one, rapid fire. When do you think the bottom is going to hit?
I don't know. I mean, as long as you see the fours, there's no bottom. That's the thing. And it's dynamic. So like data changes. So now the forecast is the fours. I mean, it might also change. Yeah, something might change. It's not like this whole thing
Yeah.
about this process is dynamic. Yeah? It might change, but right now the best, like the most likely outcome is this.
Yeah. So we're going to be in a real bottom and financial turmoil for
We're not at the
number
bottom
of
yet.
quarters.
Yeah, so that's
right.
we're in a
right.
deceleration. So like,
Okay.
yeah.
So I think that's really helpful for all of us to know, even if we don't understand. I'm just speaking for myself, even if I don't understand everything, to just understand that those things are happening and how is that impacting people on the ground, meaning our clients, our customers, ourselves, how we're investing our money or not, whether we're buying property or not, how are we living our life, making our businesses work with an understanding of what might be to come. And what to do about it. Are there any people you follow? I know you follow some Twitter people of like who kind of give these bite-sized chunks of information that I think would be helpful, especially if it's not my zone of genius. Like who do you follow on Twitter?
No, I mean, I would just follow Hedgeye actually, like the CEO, Keith McCall, and then look at who's commenting and who's part in his community. It's like a community of people, and there are a lot of institutional people who subscribe to services, and there are a lot of individuals, people like me, like semi-professional, professional. Yeah, it's quite helpful. It can be a bit overwhelming. I think I just get a little bit wrong because it's not only stocks, it's like the whole, it's global, and then it's all asset classes, so foreign exchange, commodities, all of that. So like sometimes
Yeah.
like, oh, what does that mean? And well, that's, yeah.
Would you
I mean,
recommend people find someone like in their sector if that's a real of interest and concern for people on the call? So they maybe try to find someone through Hedgeye, and we're not recommending Hedgeye. We've used it. Chris is making double-digit returns this year to date when the markets are bottoming out. He's doing very, very well. And thanks to this this model that he's been going through, would you recommend people find someone kind of that can help give them some advice, guidance in their industry? Or
I mean,
because
they
like I
have,
wouldn't go and do this myself, so I'm just speaking for myself.
I mean, they have, I mean, if you're going to get deeper into this, they also have subscriptions for sectors, which are equity market like focused, but so they have like a guy who just does financials and housing, and there's like a specific housing presentation. Then there's industrials, which has logistics and so on in there. Communication, which is like tech driven, but yeah, that's not really my main area.
But I think that's great to know that they can go somewhere, maybe if they care about the housing or property, that they can start to find people that are really in the know about what's going on.
They do very good work on like housing data and analysis.
Yeah.
I mean, that's because it's such a big component of the whole thing.
So I want to open it up to Q&A to hear from all of you. Chris, that was so helpful. And I know we could keep going once we get into it. I'd love to hear some of the questions that are coming up for you all. Either put them in the chat or come on video and mic and let's hear from you. Let's get to Melody's question. Thank you, Melanie. You said, what about stocks we already own? Just sit tight and wait. And if maybe you want to unmute yourself, you could share more to Chris as well. So please share your question.
Yeah, it was interesting what you were saying, Chris. So I'm based here in the UK. We've got stocks that are kind of international, different geographic markets. And yeah, throughout the lockdown, you know, there was a bit of a slump, and then they nicely picked up probably until like November last year, as you said. And then since then, they've been like not good at all. So our inclination is just to sit tight. We don't need this money in the short term. But if we sell out, then we're kind of locking in those losses. So I just wanted to get your view on, you know, if we can sit tight, is that the best, with the view to at some point they will come up again?
Yeah, it's a tough decision, yeah, because they dropped so much already. But the thing is, they can drop a lot more. And financially, I mean, it depends on how involved you want to be. Yeah, but I wouldn't own stocks until. I mean, I don't want to give exact advice, but okay, what you get in these markets is like these bear market rallies, and there will be a bounce, like, and it might just go up like 15% in a few days. But if you see that, this is not how the market comes back. It's so I would.
What would you do, Chris?
I mean, I personally would. It's tough because it's not mine. But if it was me, I would wait for a bounce. I would sell, and then I would wait. Because
Wait for a bear market bounce, like up 15%. Everyone's excited.
whatever,
You would
10,
say,
like whatever it
you would
is,
tell
yeah.
Melanie, don't look. You got to see through that. It's going to go,
Doesn't
and
matter.
then it's going to keep going down. So maybe cure some of the losses,
And it will be longer. This will be more drawn out, more long. Like it won't be like 2020, where it's dropped in 4 weeks and then it's up again. Like because we didn't have a real recession back then. It was not profits after profits going down. This is it's still ahead of us. It's not. It hasn't even started. It's something that goes down 30%. Can easily go down another 30% off that. And you need to, the issue is, if you're down, like losses are always more costly than gains are beneficial. So if you're down 50%, you need to double your capital to get back to break even. Because if you have 100, get to 50% loss, you need to double to get to 100. You need to 100% return to get to 100. So yeah, just keep that in mind.
Thank you, Chris. Another question. What's coming up for y'all as you hear this? What questions matter to you right now?
And I wish I would just have better news, but I still think it's, I just want people to be aware, and because it creates a lot of pain, just looking at this stuff. And yeah, it would have been better if we had talked like 3 months ago, but I mean, we're still in the early innings of the whole thing. And at least you own stocks and not crypto.
Sasa is asking, would you suggest owning stocks or EFTs?
ETFs, yeah.
Sorry, ETFs. I wrote that.
I mean, single stocks, it's just a matter of how much risk. Because I mean, the ETFs generally like move less than the stocks. Yeah. I mean, I would probably I trade mostly ETFs because to get down onto that granular like stock level, I would like it's just too it's just too much. So I just focus on sectors. So ETFs.
ETFs. All right, Isabel. Come on
Yes.
down.
Hi, I'm not going to show because I look horrible, and I'm sick. So I appreciate your time, your honesty and transparency. I think I'm in the worst position, actually. You are scaring me, but I know you're being very honest. But if I need a lot of cash flow and I quit my job, I need cash flow now to eat. So what would you do in this situation? Because you're saying not to buy, and I understood that is not to buy, I guess, anything, stocks or real estate. What would you do if you were like, you need money to eat, like to put food on your table and you quit your job? What would you do? How you can be safe before it gets worse?
Yeah, I mean, I don't know. I mean, this is why we we plan very, I mean, even the trading I do is not to generate income, because we make income differently. Like we have a whole like I mean, because we run our own business, just tell you like, I mean, we always keep money in like liquidity for 2 years. Yeah. And I mean, we always did that. It's probably not the most efficient, but yeah, I mean, if you need to make income, you need to make income. But also, or if you are self-employed, something like that, you need to plan for uncertainty. And that's not only in this situation. I mean, you can always lose clients or something happens. It's not like only the market. You need to like, I mean, we're quite conservative with our like capital, and it's probably.
Well, let me
You need
chime
to-
in, if
yeah.
that's helpful. Let me chime in, Isabel. So, it sounds like you quit your job and you've got some cash behind you and you're kind of asking those questions. What's the best move? And Chris is
Correct.
scaring us, but hopefully it's sometimes the truth is hard to stomach. It's hard to
Correct.
digest some of this news. So I would first recommend you go back and digest it before you think of the next step. So go back and digest it. Why don't you go onto Hedgeye, do the 90-minute course? I know Chris is happy to send some of the slides and just really take that step back, because if you want to make an informed financial decision, starting off with no decision is perfect. Rather than incurring losses or maybe just being out of step with like the current economic landscape. And then potentially what maybe you had hoped you wanted to do might just be on pause. And maybe that's going to redirect you into something that's a bit more safe or known until you go back. I know it's not the best advice, but how does that feel to you? Does that feel right? Or what do you think?
No, it's fine. And I know, it's very personal, and it's each person's comfort level and all that, I know everybody's different. And I appreciate, like I said, truly appreciate you guys being so transparent. And I know you can solve my problem, but it's just, I guess it was not, it just didn't coincide in a good time, all this that came about for me. But yeah, I think I will have to wait, and which is not very easy when you're in that situation, but I will do that. I will follow the advice and go to Hedge University at the minimum and see what to do. And I will do what you said as well, digest. Thank you so much.
Digest it. Yeah, exactly. And just maybe you are working again for another employer, working and doing something in the meantime, as you do some of the quote waiting of what you wanted to do, just being, it's just about being empowered with the information and being smart. And we're all pivoting, like Chris and I are pivoting. I mean, we literally pivoted to a tax-free island, we moved here, we kept moving to try to maximize our money, our taxes, our revenues. And so life takes its course. And if we can kind of put a close to it, is like life is unfolding for all of us, and you don't need to know everything, but that's why we're having these classes, is to bump up against people who can help us lead through crisis, or how to make informed decisions in the financial markets, or at least have that one bit of next information that's gonna help us. Because Chris and I are really heart-centered with what we do. We really care about who we work with, and we have a high standard of excellence when we're working. So our intention was just to offer this to you, and we are absolutely available to talk after.
Thank you so much. Thank you.
You're welcome. Let me.
I think I want to make a quick comment.
Yes,
like,
and then we'll close.
Because
Great.
people are, because also just going back to, okay, the stocks are down, what to do? I mean, there is not a lot you can invest in. It's just nothing. If we're in a situation like this, basically nothing works apart from US dollar. Yeah. And there are ETFs for that as well. So it's just like that. On the dip, you can buy dollars. If you're in pounds, you just buy dollars. And it's or if you're in the US, you can still buy ETFs on dollars. So that works. And short selling. And short selling is probably not anything for anyone here. So it's just, there's not, and once the interest rates go down, you can buy bonds, but even they don't work right. Yeah, basic. So just want to summarize quickly, like what works and it's not basically not work.
Well, and I think it's a good point to close. You know, Chris has said he's absolutely okay if someone, any of you want to reach out personally to him to just ask a question. Let me see, Chris at Liv.Lit. I'll send this in an email after. If you've got a question or you just want some direction from Chris, maybe where to go or what to look for, any of you, he's welcome and opening up just some of his consultation just to support you all on the call. I want to mention that well, first, thank you, Chris, for your time and your expertise here in supporting us to really understand where we are right now in the financial landscape and then where we're going, and just giving us some resources on where to go. Really, like, thank you. This is a huge, big conversation, and probably there's more to do. Our next class is on October 27th with Ariadne Dukas, who is actually on our call today. And Ariadne is going to be supporting us take this conversation and add to it. So we're going to be looking at how to use mindfulness to move away from being reactionary into being creative in our business. And just to Isabel's point, like, rather than reacting to what's happening, how do we think creatively? How do we actually think our way think our way into better businesses or better informed decisions? And Ariadne has worked with huge companies like Google, and she's just working with incredible large and small scale companies on mindfulness as a practice for creativity. I highly recommend that you join our class on October 27th. And that's really the next step. So we're going to stay on the line for 2 or 3 more minutes. If anyone has a pressing question that we did not get to, stay on the line and we can answer 1 or 2 more. And I really hope to see you in Ariadne's class on October 27th. And thanks you all for your time and energy. Mwah. Lots of love. See ya. Thank you. And if anyone, Marielle, I know you had a question we didn't get to. If you want to ask it here, you can, or anyone else, if you do have a few minutes, we're happy to help. Thank you, Ariadne.
Hey
You want to-
guys, thanks, Chris.
Yeah.
Yeah, if it's
Hi.
okay, I could ask that question out loud.
Go
Hey,
ahead.
guys,
Yeah, go ahead.
Yeah, I was just curious about the euro. Like, I mean, the dollar being stronger than the euro some days. Like, we're buying in Portugal right now, and it's like some days we're saving like $5,000 on our purchase, and other days it's costing us $1,000 more than the listed price in euros. And it's kind of like, you know, swings back and forth. And I don't know if you have any sense. I mean, we won't actually be able to close on it until for probably like another 45 days or so. Like, where is it going over the next couple of months? Because like what we can do is just wait for a good day and put all of our money in our like Portuguese bank account. So at least then it'll start going up and down in euro. But I was just curious what your sense was on that.
Yeah, I mean, the dollar today, it is actually bounced against the dollar right now, weirdly. So today is not a good day, but I mean, I would say, I mean, it's downward trending. Yeah. I mean, it's at 0.98 now, probably right now. So
Yeah, it's weird. It's been day to day. It's like today.
Yeah,
we'll
yeah, it's very volatile.
Then again,
Yeah.
and then down again. I'm like, what the heck?
It's 9.8. I mean, I would look at these back and forth, yeah. And if you can get something around 9.65, like it's within a month, yeah. I mean, I mean, like if it goes to the, like, there's a range in which that trades usually, yeah. But the range is kind of between right now, between 96 and 1, like 0.96 and 1. So if it gets close to the lower of that range, I would just exchange it all, or you can do it over a few days. I mean, or you split it into 2 or 3 parts. Yeah, I mean, you can't time it exactly perfect then, but it's
I guess I'll try to do is we're setting up our account now. So I guess like by exchange it, I mean like transferring our funds from our accounts here into our Portuguese bank account would count as the exchange, right?
How do you do that? I mean, that's the other question. Yeah, like, do you use like, how do you like, which exchange rate do you get?
So, I mean, it'll just convert into whatever euro like is that day, right?
Yeah, I
Like,
mean, I would
so-
probably use, yeah, there are a few websites that are cheap because the banks give you a pretty bad rate usually. They take a margin on that too. So
really? Oh,
I
that's
would
good.
try to use something like Currency Fair or Wise. And then you can
Okay.
exchange it into the other currency and then just do a local bank transfer from there. You get a bank account with them. Like you can set
Yeah,
it up
so-
really quickly.
Yeah, we have a bank account with Novo Banco that's going to be set up in a few days. So we were thinking like we could just transfer it directly into that, but you're saying that they'll actually
No, the banks will take something, so like the banks will take a good amount of that. So
really?
if you
Okay.
use Wise or Currency Fair, they take 0.45%. But I'm sure the bank will take 1% or more, like which makes a huge difference. Yeah.
Currency Fair, FAIR.
What is it?
Yeah.
Can you type it in the chat, the names that you recommended? So it's Wise,
Yes.
right? Because we use that, Marielle. I mean, we have, you know us, we have so many
Yeah.
different bank accounts. So we are always trying to figure out what the best ways to move money.
Yeah. Okay. Interesting.
Good question. So Wise, we do that. And then the other one, Currency Fair. Yeah. Okay, great.
So, okay, wise.com and currencyfair.com. Awesome. Thank you so much. I'll look
And
into that.
you set it up and you get a local bank,
Mhm.
European bank account. So you exchange it.
Uh-huh.
Yeah, you'll figure out how to do that, but it's definitely a lot cheaper than the banks. And whatever you would save for trading the euro, yeah, that is the same amount probably you can get. Yes, that was,
Wow.
Interesting. So I exchange it on wise.com or currency fair and then drop
Yeah.
it as euro into the bank account and then I don't get
Yeah,
charged
because-
that fee.
yeah, and you can do a local banks transfer from in there.
Okay.
With like, yeah.
Interesting. Okay, fantastic. That's a great tip. Thank you so much.
Chris.
Thank you, Marielle. Thank you, everyone. Well, thank you all. I know we've got to go pick up our kids at daycare, so we're going to go. Thank you all for spending a few more minutes with us today. We look forward to seeing you on the next class on October 27th. We're going to be diving into mindfulness and creativity, and we'll see you there. So thank you again, Chris, and I'll see you on October 27th.
Bye.